Have you ever found yourself wishing there was just one place for, all your money stuff? A real one-stop shop?
Or maybe you've been hearing all this buzz about AI and blockchain and wondered, how is this actually going to change how I manage my finances?
Well, today we're doing a deep dive into exactly that. We're looking at the latest from SoFi, their second quarter 2025 earnings call, and a recent news release.
Right. Our mission here is to unpack what's behind their, frankly, remarkable growth, figure out how their strategy really clicks, and see how they're using these new technologies.
Yeah, technologies that could really transform things, ultimately helping you figure out the future of your own money.
And we're pulling this straight from the horse's mouth, the CEO and CFO's comments, the official reports. We're getting you the key takeaways. Okay, so let's unpack this. So SoFi just put out some really strong numbers for Q2 2025. And it's not just growth, it feels like it's speeding up.
It really is. The scale of the acceleration is pretty fascinating. Adjusted net revenue hit a record $858 million. That's up 44% year over year.
Wow, 44%. Yeah, their highest growth rate in like over 2 years.
And did that translate, down to the bottom line? How did profitability look?
Oh, absolutely. Very directly. This was their 7th straight quarter being profitable. Net income hit $97 million.
Okay.
And adjusted EBITDA, that was a record too, $249 million. That's an 81% jump from last year.
81%. So that shows some serious operating leverage, right?
Exactly.
Yeah.
Profits growing faster than revenue. They hit a 29% adjusted EBITDA margin, which is, quite healthy.
But beyond the dollars and cents, what really caught your eye? What metrics show the underlying momentum for someone maybe thinking about using them?
Well, this brings up a really important point. How are they getting people so engaged? I mean, they added a record 850,000 new members.
850,000.
In one quarter.
In one quarter, yeah. Brings their total up to 11.7 million. That's up 34% year over year.
Okay.
And it's not just members, it's products too. Another record 1.26 million new products added. There are over 17 million total products now. So people aren't just signing up, they're actually using more stuff once they're in.
Precisely. It's not just new faces, it's existing members digging deeper. And that points to a bigger strategy.
Right. This isn't just random product additions. It connects to that one-stop shop idea you mentioned.
Yeah.
This sounds like where it gets really interesting.
It really is. They're what they call the Financial Services Productivity Loop, or FSPL. That's absolutely key.
Okay, FSPL. What does that mean in practice?
It's basically designed to pull members in and then make it really easy and beneficial for them to use more and more SoFi products.
And it's working.
The data says yes. Get this, 35% of all the new products opened in Q2 were from people who are already members.
Okay, 35%. So give us an example. How does this actually play out for, a typical member? And how does it help SoFi's business?
Sure. So think about it like this. You might start with SoFi Relay. It's a free tool, helps you see all your finances in one place.
Okay, free tool. Low barrier to entry.
Exactly. Costs SoFi less than $15 to get you in the door with that. But then maybe you see how useful it is and you notice your bank pays like nothing on your savings.
Right, like 0.02% or something abysmal.
Right, so you move your checking and savings to SoFi Money. Suddenly you're getting, say, 3.8% APY. Big difference.
Huge difference.
And doing that makes you a SoFi Plus member. Now you get extra perks, access to financial planners, discounts on loans, things like that.
Ah, so you get more value, and SoFi starts building a much deeper connection with you. But are there challenges in making that smooth, making sure people actually take those next steps?
That's the goal, absolutely. And yeah, the challenge is always seamless integration, making the next step feel natural and valuable. But when it clicks, well, maybe next you open a SoFi Invest account. They offer a 1% match, which is nice. Then maybe later you've got some high-interest credit card debt. You see you can consolidate that into a SoFi personal loan at a much lower rate.
Okay, saving money again.
Right, and perhaps you start using SoFi Vaults, their savings tool, to put aside money for a down payment on a house, maybe eventually getting a SoFi home loan.
Wow. So from that one free tool.
From that, like sub $15 Relay acquisition, SoFi could potentially make around $1,800 in variable profit just on that personal loan. And that's not even counting the value of having you as a long-term multi-product customer.
So that's what they mean by a virtuous cycle then. It's not just selling more, it's creating this self-feeding loop.
Exactly right. Higher lifetime value per member. That lets them reinvest back into the business, better products, lower loan rates, higher savings rate.
Which attracts more members.
Which attracts more members who then use more products. You see the loop, and it's worked over the last 5 years, nearly 50% revenue growth, 58% member growth, 60% product growth compounded annually. It's pretty powerful when it works.
Okay, that makes sense. Now, you mentioned they're also strategically shifting their business mix. What's driving that move towards what they call capital-light businesses?
Yeah, that's a really important strategic shift. A major driver is just getting more revenue from businesses that don't require holding loans on their own balance sheet, non-lending businesses.
Right, less risk, potentially higher margins?
Potentially, yes. Their financial services and technology platform segments combined, they brought in $472 million in revenue this quarter. That's up 74% year over year.
74%. Wow.
And get this, those two segments now make up 55% of SoFi's total revenue. So more than half their revenue is now not from direct lending on their books.
Okay, 55%. And a big chunk of that is fee-based revenue.
Correct. Total fee-based revenue hit a record $378 million, up 72% from last year.
So what kind of fees are we talking about?
It's a mix. A big part is their loan platform business, or LPB, which we should definitely dig into. But it also includes loan origination fees, referral fees when they send business elsewhere, interchange fees from debit card swipes, brokerage fees from SoFi Invest.
Okay, so it's pretty diversified fee income. It's running at what, like a $1.5 billion annual pace now?
Over $1.5 billion annualized pace. Yeah, it's becoming a really significant engine.
So if you're listening and thinking, okay, fee revenue is great, but how do they generate that without taking on more risk? Their loan platform business seems like a really smart, maybe surprisingly scalable answer. Tell us about that. How does the LPB work? Why is it so important?
The LPB is it's a really clever example of that capital light model. And you're right, it's not just about efficiency. It shows SoFi evolving. They're not just a consumer lender anymore. They're becoming kind of a B2B infrastructure player too.
How so?
Well, basically, SoFi uses its tech and expertise to originate customized batches of loans for other companies, for third parties. Then they sell those loans off their balance sheet really quickly, usually within days.
So SoFi makes the loan but doesn't hold on to it.
Exactly. They don't keep the credit risk long term. But they earn fees for originating and transferring each loan. It lets them make money from loan demand they couldn't previously meet themselves. It's a totally new, very scalable revenue stream.
And the numbers there look pretty good too.
They really do. The LPB originated $2.4 billion in loans just in Q2. That's a 57% jump just from Q1.
57% quarter over quarter. That's huge growth.
It is. It's now running at an annualized pace of over $9.5 billion in originations. And that translates to over $500 million, $0.5 billion in high-margin, fee-based revenue annualized.
So it's getting close to being $1 billion revenue business just on its own.
Moving that way, definitely. And what's interesting is they've also expanded what kinds of loans they originate through LPB. They're now doing near-prime loans and even loans outside their typical credit standards, but originating them for these third parties.
So they're monetizing loan applications they would have otherwise just rejected.
Pretty much. They said something like they get $100 billion in loan applications a year they can't meet. Now they can capture value from a piece of that.
That's smart. Now, are there any risks with originating near-prime loans, even if they sell them off, or is it pure upside?
Well, it's mostly upside for SoFi because, like we said, the ultimate credit risk sits with the investors buying the loans. SoFi's job is the origination, the underwriting, using their tech fidelity. That's what they're selling.
Okay.
And they've lined up some pretty significant partners, too. Multi-billion-dollar deals with big names like Fortress and Blue Owl. That gives them serious long-term liquidity and investment for this platform.
Right.
And looking further out, they even talked about the potential for loan tokenization.
Tokenization, like putting loans on a blockchain.
Kind of, yeah.
Yeah.
Turning loans into digital tokens. If that takes off, it could make these loans tradable almost like stocks, opening them up to a much wider pool of investors globally. That could really amplify the whole LPB model.
Fascinating. Okay, so shifting gears a bit. So SoFi's leadership talks about being at this unprecedented point in time with two huge tech trends hitting at once: crypto, blockchain, and AI. How do they see themselves positioned to really grab those opportunities?
Well, being a digital-first, tech-focused company helps. They're building these technologies right into their platform, not just bolting them on. So maybe let's start with crypto and blockchain. What are some of the actual innovations they're rolling out?
Yeah, what's the immediate impact we can see?
Okay, first big one. Self-serve international money transfers. right from the SoFi Money account.
Ah, remittances and cross-border payments. That's a huge market.
Huge. And traditionally, kind of slow and expensive. SoFi members can now send money securely to dozens of countries. Think supporting family abroad or buying something internationally.
And how does blockchain fit in?
It's all automated, uses a secure blockchain network behind the scenes. They're saying it's way faster, often under a minute, 247, and cheaper than the old ways. Plus, you see all the fees and exchange rates up front. Full transparency.
Under a minute. That's a game changer compared to traditional bank wires.
Right. And it works both ways. They're looking at enabling payments into the U.S. via the app, too.
Okay, that could definitely disrupt traditional remittance players.
Mm-hmm.
What about actually investing in crypto?
Yeah, they're getting back into crypto investing. Members can buy, sell, hold majors like Bitcoin, Ethereum, right in the SoFi app.
Now, that's interesting. Given all the volatility and, frankly, some of the trust issues in the crypto exchange world, why re-enter now? How are they handling that?
That's a great point. I think their confidence comes largely from their status as a nationally chartered bank.
The trust factor.
Exactly. They did a survey, found 60% of their members who invest in crypto would actually prefer to do it through a licensed bank like SoFi rather than their current exchange. That bank charter provides a level of regulation, security, and frankly, trust that many standalone crypto platforms just don't have.
That makes sense. So it's not just about trading coins. What else are they thinking about in the crypto space?
No, it's broader. They see opportunities across the platform, things like offering stable coins.
Which are cryptos pegged to, like, the dollar.
Right. And their bank license gives them a head start there, potentially making it easier from a regulatory perspective. They're also looking at letting members borrow against their crypto holdings, adding crypto to payment options, maybe introducing staking.
Staking, where you earn rewards for holding crypto.
Yeah, locking it up to help secure the network and earning yield. But crucially, they also plan to offer their blockchain and digital asset infrastructure to other companies through their tech platform.
Okay, so becoming a B2B provider in the crypto space too,
Yeah.
not just a consumer app.
Exactly. That signals a much bigger ambition, being part of the foundational plumbing for digital assets.
Okay, so that's crypto and blockchain.
Uh-huh.
What about the other super cycle? AI. How's that showing up? Is it just back office stuff, or does it actually impact me as a member?
It's both, actually. They are using it for back office efficiency, speeding up things like handling disputes, filing regulatory reports like suspicious activity reports, makes things run smoother internally.
Right, cost savings, efficiency gains.
But yeah, they're also using it to directly improve the member experience.
And what's the big new thing there that, I might actually use?
The big one they highlighted is the new Cash Coach. It's part of their Relay product, that free financial overview tool we talked about.
Okay, Cash Coach, what does it do?
It's designed to analyze all your cash, wherever it is, checking, savings, maybe even accounts outside SoFi that you've linked. It figures out how much cash you actually have, points out where you might be earning practically nothing on it.
Like that 0.02% savings account.
Exactly. And then it suggests ways to optimize, how to put your cash to work to get better returns, maybe by moving it into SoFi Money or other higher yield options.
So it's like personalized advice based on my actual data.
That's the idea. And the bigger vision is to roll out these kinds of coaches across the whole platform. A coach for investing, a coach for debt management, guiding you on what you must do, what you should do, and what you can do with your money.
So AI isn't just some abstract thing. It's meant to be like a personal financial guide right in the app.
That's the goal. Personalized, actionable guidance for you.
That's a pretty compelling vision. Is AI showing up anywhere else in their business, like on the tech platform side?
Yeah, definitely. In their technology platform segment, the part that serves other banks and fintechs, they have this AI-powered virtual assistant called Cyberbank Connecta.
Okay.
They reported it led to 65% faster average response times for customer service chats and cut the number of people abandoning chats in half. Real efficiency gains there.
Wow, 65% faster. That's significant.
And they're diversifying who uses their tech platform beyond just traditional finance. They mentioned Banco Nation in Argentina, huge state-owned bank there.
Yeah.
Using SoFi's Cyberbank digital platform, they saw a 25% jump in organic client growth and cut implementation time for new features from months down to just 4 days.
Months to days. That's incredible.
Yeah. And they even launched a new rewards debit card program with Wyndham Hotels and Resorts using their platform. They're expecting like 10 new clients to be contributing revenue by early next year. So that side of the business is growing too.
Okay, let's circle back to lending. It's still their original business, their foundation.
Mm-hmm.
Are they still innovating there, or is the focus mainly on these newer areas?
Oh, no, they're definitely still innovating in lending. Take personal loans, that's their biggest lending category. They hold about 15% of the prime market there.
Okay.
They just launched a specific new product aimed squarely at prime customers who are carrying balances on high-interest credit cards.
The credit card debt trap.
Exactly. Helping people refinance that expensive debt, often over 20% APR, into a SoFi personal loan with a much lower rate, maybe in the low teens. That's a huge potential market. They estimate over $700 billion in that kind of outstanding debt.
700 billion. Wow. Okay, what about student loans? That whole world has been pretty shaken up recently.
It really has, but SoFi seems to be navigating it well. They originated nearly $1 billion, almost $1 billion in student loans in Q2, up 35% year over year.
So still strong growth there.
Yeah. And they introduced a new refi option designed for the current environment. It allows for lower payments at the beginning of the loan term, and then the payments step up later on.
Okay, helps with cash flow early on.
Right. They think this targets around $280 billion of student loans that could potentially be refinanced. And they're also looking to capitalize on changes like the government getting rid of the Grad PLUS loan program.
Got it. And home loans, you wouldn't expect huge growth there with interest rates being so high.
You wouldn't, but they actually saw really strong growth. Total home loan originations hit nearly $800 million. That's up over 90% year over year.
90%. In this rate environment, how?
A big piece of it was their home equity loan product. It didn't even exist a year ago, and now it makes up almost a third of their home lending volume, people tapping into their home equity.
That makes sense. HEWCs and home equity loans have been popular.
Exactly, and they feel they're really well set up to capture a ton of mortgage refinance business whenever interest rates do eventually come down. They noted almost 3 million of their current members have mortgages somewhere else. That's a huge built-in potential refi market for them.
3 million members with outside mortgages.
Okay.
That leads to the crucial question, though, with all this growth, especially in lending. How is their credit quality holding up? Is this growth sustainable from a risk perspective?
Yeah, that's always the key question for a lender. And based on their Q2 results, credit performance looks quite strong, particularly in personal loans.
Okay.
The rate of loans on their balance sheet that are 90 days or more delinquent actually decreased for the fifth quarter in a row. It's down to 0.42%.
Okay, delinquencies trending down, that's good. What about actual losses, charge-offs?
Those also improved for personal loans. The annualized charge-off rate, the rate at which they expect to lose money on loans over a year, fell to 2.83%. That's down from 3.31% last quarter.
So losses are decreasing too. Any caveats? What about student loans?
Student loan charge-offs did tick up slightly to 0.94% annualized, but they said that was mainly due to some one-off things, switching a loan servicer, integrating a portfolio they purchased. They expect the normalized rate to be back in line with where it was before.
Okay. And overall, they still feel good about their loss projections.
Yeah, they reiterated their confidence in their long-term assumption for personal loans, expecting lifetime losses to max out around 7-8%. And they said the loans they've originated more recently are actually performing significantly better than that assumption. So credit looks solid right now.
Good to hear. Okay, so beyond the financials, the products, the tech, how are they trying to become, just a name people recognize, a household brand?
They're definitely putting effort and money into brand building. You see the SoFi Stadium, of course, but they're doing more targeted things too. Like they were the main partner for CMA Fest this year, huge country music festival in Nashville.
Okay. CMA Fest.
Yeah, offered special perks there for SoFi Plus members. They also partnered with the country artist Kelsey Ballerini on a campaign focused on financial independence, trying to connect the brand with positive financial themes.
And is it working? Are more people recognizing the name?
It seems to be. They track unaided brand awareness, basically, people naming SoFi without any prompting. That hit an all-time high for them at 8.5%, up from 7% just the previous quarter.
Okay, 8.5%. Still room to grow, but moving up.
Definitely moving up. And that higher awareness helps everything else. It makes their regular product marketing cheaper and more effective because people already have some idea of who they are.
Right. So with all this momentum, strong growth, improving brand new tech rolling out, they actually raised their forecast for the rest of 2025, didn't they? What's the outlook look like now?
They did. They bumped up their guidance. Now they expect to add over 3 million new members this year alone. That's about 30% growth year over year.
3 million members in 1 year.
Yeah. And for revenue, they're projecting around $3.375 billion, also about 30% growth. Adjusted EBITDA expected around $960 million. That's a 28% margin. And net income, actual profit, around $370 million for the year.
Pretty strong numbers. What about longer term, beyond 2025?
They seem really confident looking further out. They reaffirm their goal of growing revenue by more than 25% compounded annually from 2023 through 2026.
25% plus growth for multiple years.
Yeah, and they have an earnings per share target for 2026 between $0.55 and 80 cents.
Okay.
Interestingly, the CEO mentioned their biggest challenge right now isn't finding opportunities, it's actually deciding what not to do. They have so many potential avenues for growth.
It's a good problem to have, I guess.
Right, so they're focusing on the things they believe will drive the best compounded growth for decades, really aiming for that high return on equity, like 20–30%.
And where are they investing heavily to make that happen?
A lot into tech talent engineering, product development, specifically called out hiring for new SoFi Money features, building out SoFi Invest, including adding options trading, and especially doubling down on crypto and AI development.
Makes sense. Given the super cycles discussion, it really sounds like a company that's intensely focused on the future, but also on its internal workings, its culture.
Absolutely. The CEO spent some time talking about what he calls the SoFi way.
The SoFi way.
Yeah, emphasizing this culture where employees are encouraged to act like founders, be problem solvers, be, gritty, persistent, and act like partners.
So they're trying to build a specific kind of internal engine.
Exactly. They see that focus on leadership, alignment, accountability, all that cultural stuff as absolutely critical to actually hitting those really ambitious goals. He even said they want to have the best culture in the world, so high aspirations there too.
Okay, so to wrap up then, we've seen SoFi post a record-breaking Q2. It seems driven by that unique one-stop shop strategy really starting to fire on all cylinders.
Yeah, and fueled by that diversification into fee-based, capital-light businesses like the loan platform business, plus these big, bold bets on emerging tech like AI and blockchain. It really does seem like they're positioning themselves for more growth ahead.
So the final thought to leave you with, as financial services get more digital, more personalized, what could your financial life actually look like?
Imagine a world where AI isn't just suggesting things, but truly acting like your personal financial coach, predicting your needs, automatically optimizing your money for you.
Or think about moving money internationally being as fast and easy as sending a text message, all thanks to blockchain.
How will innovations like these change the way you interact with your finances day to day? And what completely new opportunities might they unlock for you down the road? Something to think about.